There it is, the closing bell at the New York Stock Exchange. It's not a great start of the week for the U.S. stock market. The Dow Jones fell by about 320 points.
The S&P and also NASDAQ closed in negative territory. Both dropped about 0.5%. Well, joining us now is Rick Newman. He's a senior columnist for Yahoo Finance. Rick, last week, thanks for joining us, marked quite the volatile week for U.S. stocks after the Fed announced yet another interest rate hike. You've written about a hard landing. Tell us just how rough can we expect that landing to be and how U.S. stocks will be impacted this week?
It depends on what happens with inflation, and ordinary people can actually follow this on their own to a certain extent. This is not some arcane algorithm at the Federal Reserve. It's really just what is going on with inflation. So currently, the U.S. Inflation rate is 8.3%. When that last report came out 2 weeks ago, a lot of economists thought it would come in lower, that it might drop down to around something under 8%. So what we're looking for here is we need to see a consistent glide path down. So let's get inflation down in the 7% range, and then let's get it down in the 6% range. And as we see that happening, assuming it does, that will be a sign that the Fed is going to be able to ease up on interest rate hikes. Now, the fact that this is just not happening very quickly, it explains why the Fed is hiking interest rates more than a lot of people think it should or would otherwise be doing. And the so-called hard landing here would be that we're going to have a meaningful increase in unemployment in order to get inflation down. That doesn't necessarily make a lot of sense to people. Like, why would the Federal Reserve want people to lose their jobs?
Yeah.
But the reason it actually wants that to happen is because that means there will be fewer people with disposable income to spend. If you bring spending down, then you have loosened up on demand, and that is one way to get prices down. So that's the battle the Fed is facing, and we're all watching to see what they do next.
Yeah, we heard the Fed Reserve Chair say that last week, Jerome Powell, but when it comes to individuals losing their jobs, it certainly makes a difference from hearing about it just in terms of economic numbers. But Rick, you were mentioning U.S. inflation rate at 8.3%. Over in the U.K., the inflation rate is 9.9%. There's some really big news happening with the British pound falling to a historic low against the U.S. dollar. How much of this is the global economic troubles that we're all experiencing versus the tax cuts that have been proposed there in the U.K. specifically?
It's a mix of both. So the UK and Europe in general are having a harder time with inflation than we're having here in the United States. And most importantly, they're having a much harder time with energy costs because they are so reliant on Russian energy and particularly on Russian natural gas. So going into the winter, I mean, the big concern in Europe is that ordinary people just are not going to be able to afford to heat their homes. And natural gas prices in Europe are something like 6 or 7 times higher than they were a year ago, whereas here in the United States, the increase is much less. Natural gas prices are still up here, which means heating electricity are going to be more expensive this winter, but they have a genuine crisis in Europe. And that's part of why you're seeing these gyrations in financial markets. Now, what happened with the British pound is because of tax cuts there and what's happening with basically with the budget deficit of the United Kingdom. Investors are just saying they don't want to hold assets that are denominated in pounds because they think they're going to lose value relative to assets denominated in dollars, say. Plus, the dollar is really strong because of those interest rate hikes here. So investors want to hold dollars and they want to hold assets denominated in dollars. What that means for Americans, if you have the budget to make a trip to the United Kingdom, things are going to be a lot cheaper than they would have been, let's say, a year ago or even 6 months ago. For ordinary Americans, this won't affect them much. It does affect U.S. exporters because stuff that you produce in dollars gets more expensive when you're trying to sell it to people in other currencies. But we're fairly isolated, at least for the time being, from what's going on in the UK and in Europe.
Yeah, I was just there and I heard from so many of the folks that I was speaking with that they're really concerned, particularly heading into winter, about those high energy prices.
And here at home, we've been talking about, a possible deep recession. Now, this new fiscal plan for the UK is worsening concerns about a global recession. I'm sure a lot of people are concerned, but we'll try to listen to your advice and go visit now that there's more space than when you were there last week.
Show yourselves if you can.
All right, Rick, we know you're going to keep an eye on all of it for us. Thank you.